Welcome. In this video, will ZBCN coin price fall further? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The chart shows a notable downward trend structure that has been in place for a long time and continues to guide price movements. This structure is characterized by the formation of lower highs at each peak, as well as progressively lower lows at the bottoms. This indicates that overall market pressure is coming from sellers, that buyers have not yet been able to step in with strength, and that the price remains trapped under this trend, unable to determine a clear direction. Such downtrends are typically represented by a trend line on the chart, and each time the price touches this line, it faces downward pressure and retreats to lower levels. If this trend line has been tested multiple times over time without being broken, it gains strength and becomes a more decisive barrier in the eyes of investors. At the same time, this trend line looms over the price like a shadow and weighs on investor psychology. However, every downtrend has a lifespan. By nature, markets cannot continue in one direction forever. At some point, this dominant structure breaks and a trend reversal begins. We are currently right at the threshold of such a transition. At present, the price is trading very close to this descending trend line. This proximity signals that a critical technical level is about to be tested, and that the market is approaching an important decision point. These types of levels are considered inflection points in technical analysis. The price will either break through this barrier and initiate a new upward phase, or encounter resistance and resume its downward movement. The technical breakout or rejection that occurs here will be decisive for the short and medium-term market direction. Breaking a descending trend line generally provides the price with fresh upward momentum. This is because the trend line represents seller dominance. When the structure is broken, it signals that buyers are stepping in, the supply-demand balance is shifting in favor of the buyers, and a new price movement is beginning. This breakout also represents the crossing of a psychological threshold in investors' minds. While previously, the price had always reversed at this line, a successful break now creates a trend is changing perception, triggering new buying interest. This can cause the price to rise more rapidly. However, a crucial point must be considered. The price's approach to this trend line should be evaluated not only visually, but also in conjunction with volume, momentum, and other technical indicators. If the price breaks the line with rising volume, it indicates that the breakout is valid and strong. But if the breakout occurs on low volume, it could be a bull trap and caution is warranted. On the other hand, if the price fails to break through the trend line and resumes a downward move, it signals a scenario where sellers are back in control and buyers remain weak. In this case, the price may test the previous low or even move to lower levels. In other words, this trend line is not only the key to upside potential, but also the threshold of downside risk. Therefore, every movement around this level carries great technical significance. Additionally, breaking a descending trend line often triggers other technical patterns. For example, formations like a falling wedge or descending broadening wedge typically hold upward breakout potential, and the trend line in question may represent the upper boundary of such formations. This breakout may also mark the beginning of cup and handle formations, inverse head and shoulders patterns, or bull flags. So it's not just one technical setup at play, but rather a chain of confirmations which adds confidence for the investor. Descending trend lines also hold major psychological importance for investors. As long as the line remains intact, market participants tend to act cautiously. Buying is limited, positions are held for shorter periods, and risk aversion dominates. But when the line breaks, confidence enters the market. Buyers behave more boldly while sellers begin to close their positions. This leads to reduced supply, increased demand, and acceleration in price movement. Since the current price is very close to this descending trend line, this area must be watched closely. A breakout at this level may not only be a technical detail, but also signal a trend reversal. Following such a breakout, the price would be expected to first target the previous high and then move toward higher resistance levels in sequence. The price structures formed during this process will offer new trade opportunities for investors. In summary, the current descending trend line on the chart is a technical reflection of the market's time under seller control. A breakout above this line would indicate that buyers have regained control, market psychology has shifted, and the price is preparing to enter a new upward phase. However, if a breakout does not occur, the price remains under pressure and the downtrend may continue. Therefore, it is critical to monitor this level, analyze it, and support it with other technical indicators. But we can't make decisions based on trends alone. Let's take a look at the other metrics. Stay tuned. A detailed examination of price movements in the market through technical analysis methods is an indispensable approach for investors, both to understand the current situation and to evaluate possible future scenarios. In this context, one of the most frequently used analytical tools is the Fibonacci retracement, which is particularly effective in identifying correction levels and determining potential reversal zones with high accuracy. When applied to the current chart, based on the price movement from the bottom to the top, it becomes evident that the price has reached a very critical and technically significant zone. Upon examining the current structure on the chart, it is observed that after the recent upward move, the price has pulled back, and this correction has reached the two most closely watched key levels according to Fibonacci ratios, namely the 61.8%, 0.618, and 78.6%, 0.786 retracement levels. Historically, as seen many times before, these levels are strategic areas where price often reverses direction and new bullish waves begin. Fibonacci retracement levels are not merely tools, they are also structural signals that reflect investor psychology and show where buyers and sellers are likely to re-enter the market. The 61.8% level in particular, also known as the golden ratio, holds great significance not only in nature, mathematics, and art, but also in financial markets. This ratio is not just a numerical value, but a psychological turning point on the mental map of many traders, as numerous algorithmic systems, large funds, and experienced individual investors concentrate their actions around this level. The fact that the price has now reached the area between the 61.8% and 78.6% levels indicates a high potential for a reaction within this zone. Historical data shows that price often changes direction in this range, downward pressure weakens, and buyers become active again. This means that the current correction should be interpreted as a healthy pause and reaccumulation rather than a collapse. Especially after such corrections, the subsequent upward movements can be more decisive and higher in volume compared to previous trends. As the price approaches these levels, it nears oversold territory, and many technical indicators begin to generate oversold signals. This suggests that selling pressure is weakening, supply is running out, and demand is preparing to step in. In other words, these levels truly offer a foundation for a reversal. Moreover, a potential rise from these levels may not only initiate a short-term move, but also signal the beginning of a new medium to long-term trend. Price movements that reverse from the 61.8 and 78.6% Fibonacci levels often target previous highs. This implies that the price may retest or even surpass its prior peak, offering significant opportunities for investors. In conclusion, based on the Fibonacci analysis from the bottom to the top, the current price level holds substantial importance from a technical analysis standpoint. This zone has repeatedly proven effective in the past and carries strong psychological impact in the market. From both mathematical ratio and market behavior perspectives, this area provides a foundation for a potential resumption of the uptrend. However, for this potential to materialize, the price must clearly break upward from this zone and be confirmed by supporting technical indicators. An upward reversal from this level could shift market sentiment entirely, both technically and psychologically. Therefore, it is crucial for investors to closely monitor the signals that may form in this area, as doing so helps minimize risk while maximizing potential gains. The timeless ratios offered by Fibonacci are not just tools, they are the most sensitive measurements of investor behavior in the market. And right now, the price is standing at the doorstep of these ancient levels. If a reversal occurs here, it could be more than just a technical bounce. It could be the spark of a new bullish trend.
One of the most notable technical structures on the chart is the downward trend line that has formed on the RSI indicator. This line has emerged as RSI values have created lower highs over time, indicating that momentum is downward, buyers are weak in the market, and the overall trend remains under pressure. However, RSI has now approached this downward trend line once again and is currently making a critical contact. This contact marks a significant crossroads from a technical analysis perspective. A breakout above this trend line by the RSI could trigger a substantial bullish potential for price, while a failure to break it might suggest that the current weak momentum will continue and the price still lacks the energy needed to move higher. The RSI indicator in technical analysis not only shows overbought or oversold regions, but also clearly reveals structural changes in momentum, trend reversals, and divergences between price and indicator. In this context, trend lines drawn on RSI have the ability to reveal technical structures that may not be visible on the price chart. Especially a descending trend line represents weak buying power and declining momentum in the broader market. However, if the RSI is approaching or touching this downtrend line, it can be considered a potential reversal signal from a technical standpoint. At its current position, RSI is seen to be making contact with this descending trend line. This contact is considered a decision point in technical analysis. If the RSI breaks decisively to the upside from this level, It would not only indicate that RSI is shifting direction, but also suggest that buyers are gaining strength in the market. Analyses conducted using RSI trend lines are regarded by many professional traders as early signal generators, because this kind of breakout in the RSI often provides strong foresight into the direction price may move before any visible action occurs on the chart. If RSI breaks this descending trend line to the upside, it also has a positive impact on investor psychology. This breakout would indicate that the declining momentum structure has ended and that buying appetite in the market is gaining strength again. Such breakouts are often accompanied by increased momentum. If RSI manages to settle above the 50 level as well, it would further confirm the strengthening momentum and indicate that price may gain bullish traction. However, the alternative scenario must also be considered. If RSI is rejected once again from this trend line, it would suggest that weak momentum continues, buyers still lack sufficient strength, and the price does not yet have the technical support needed to sustain an upward move. In such a case, RSI may decline back to lower levels, creating pressure on price and indicating that the current downtrend may persist for a while longer. Whether RSI breaks or fails to break this descending trend line can be decisive not only for short-term signals, but also for the medium-term trend. A breakout of this line changes investor risk perception. Investors who were previously hesitant may begin to take long positions again, which in turn drives the price upward. But if RSI faces resistance at this level, investors looking to enter positions may remain cautious, and market volume could shrink. Additionally, the breakout of such descending trend lines on the RSI can also reveal hidden formations that are not visible on the price chart. For example, a break of this structure on RSI may suggest that movement within a falling wedge, descending channel, or narrowing triangle is nearing completion. Therefore, RSI is not just a momentum indicator, it can also provide early signals for trend reversal patterns. As such, a break of the descending line on RSI may actually trigger a much larger technical formation. At such key technical contact points, the price's position is also critically important. For example, if the price is holding at a significant support level while RSI is attempting to break its trend line, these two technical conditions together can generate a much more reliable bullish reversal signal. For this reason, breakouts on RSI should not be evaluated in isolation. They must be assessed in conjunction with price action, volume analysis, chart formations, and other indicators. A breakout of the RSI's descending trend line also represents a psychological shift. It signals that a period of indecision in the market has ended, buyers are becoming more assertive, and risk appetite is increasing. Crossing such psychological thresholds paves the way for the price to enter a technically driven new bullish wave. In summary, the descending trend line observed on the RSI indicator is a highly important technical structure. The current situation in which RSI is making contact with this line represents a critical threshold where the market's direction will likely be determined. If this line is broken to the upside, it could open the door to a new bullish phase for price. However, if the breakout does not occur, it suggests that weakness in the market persists and the price is not yet ready to move higher. Therefore, this structure on the RSI must be closely monitored, supported by other technical indicators, and any breakout or rejection should be interpreted together with price action. RSI needs to break the trend line.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.